Why mortgage rates are doomed to stay above 7% for the foreseeable future. Listen, you guys, right here we have a Business Insider article, May 26, 2024. With the Federal Reserve looking unlikely to ease rates before September, housing market analysts are recalibrating mortgage rates outlooks as home loans are heavily influenced by the Fed fund rates. That's complicated the outlook for all kinds of borrowing costs for consumer businesses, and notably, it has made the outlook for mortgage rates much less rosy for potential buyers in this year. In this report, Fannie Mae estimated that the 30-year mortgage could creep up to 7.1% in the coming quarters before easing slightly by the end of the year. That's well above the 6.4% forecast it held in April. What does that mean, you guys? That means, listen, there are zero refinancing options coming, most likely for the next couple of years. Right here, Doug Duncan, chief economist Doug Duncan, he says, for now, we see rates remaining closer to 7% through the end of the year before trending downward in 2025, but note potential downside to that forecast given recent actual movements in rates. And this article ends pointing out the obvious, which is really interesting. Many homeowners originally bought their property when mortgage rates were as low as 3%, and the steep rise since has disincentivized selling. So yes, we've covered before that the inventory, especially here in Silicon Valley, has been almost at 50% of what's been normal for the last 20, 30 years. And especially in the last few years, many people got, those pandemic numbers, interest rates at 3%, locking in, 4%. So they're saying, why should I move? Jumping over to one more article, the Fed's Kashkari wants to see many more months of positive inflation data before a rate cut. What does this mean? If you read this article, this Fed's Kashkari talks about keeping the interest rates high so that they can keep the inflation numbers positive for a little bit longer. What does that mean? All of a sudden, in the end, there are no refinancing options probably coming for the next 2 years or so. So these high interest rates of 7% for 30-year fixed mortgages on homes look like they're here to stay for the next couple of years.